From Value Invest Asia, this is The Asian Entrepreneur. We explore the hidden stories of successful founders, business leaders, and investors in Asia. Here's your host, Stanley Lim.
Hi guys, Stanley again. In this episode, you're going to hear from the chairman and CEO of iFast Corporation, Mr. Lim Chun. Mr. Lim is actually an engineer by training, but went into the finance line and worked his way up the ranks. You're going to hear from him how the Asian financial crisis actually cost him his job, but how he turned that crisis into an opportunity by starting at his own investment fund and later on what we now know as fundsupermart.com. My key takeaway from this episode is that Mr. Lim is really a very long-term investor and a businessman. You're gonna hear from him how he doubled down on his investment during the Asian financial crisis and how he viewed the current prospect of iFast Corporation for the long term. I hope you enjoy it. Here we go. How's life for you growing up? Can you tell me a little bit about your childhood?
Well, my childhood was in Malaysia. I'm a Malaysian, born in Malaysia, still a Malaysian, but I spent my first 12 years in Malaysia. So my hometown was Pontian, Johor. So small town, and essentially, grew up there, and it's a typical childhood for a Malaysian in a small town, and I spent my primary school there.
Right. Okay. Yeah. So when did you left Pontian to come over to Singapore?
At the age of 12, after primary 6, I came to study in Singapore. That's starting secondary 1, and since then I've been in Singapore.
Okay. And have you always see yourself as an entrepreneur since young? Are you very entrepreneurial and trying new things?
No. In fact, I never thought that I'll be starting a business until we actually started iFast or Funds back then. I think like a lot of other people, when they're young, they don't exactly know very well what they truly want. And I myself have to say that even at the stage where I was applying for university course, I still don't really know what I want. But after A-level, I guess I felt that I was good in mathematics, physics, and so on. So I thought it's natural to also want to apply for engineering.
Okay.
But actually back then, my dad, like many parents, actually wanted me to be a doctor. So I grew up with my parents, my dad especially, harboring the hope of me becoming a doctor one day.
Okay.
In a sense, I was sort of working towards that. Unfortunately, I didn't do well in my biology in A-level. I did quite well for the other subjects, mathematics, physics, chemistry, but not for bio. So I did apply for the medical faculty as a first choice, but didn't get in. And my second choice was engineering at NUS, and went to engineering, and so that was the academic career for me.
Right.
My dad, I guess, was quite upset at that time about the fact that I wasn't going to be a doctor anymore because that was his dreams for me all these years. But back then, I suppose today, if I ask him again, does he still want me to be a doctor? He said no.
Yeah, I bet. Definitely. Okay, so you went into the engineering school in NUS.
Yes.
Right after, did something meaningful happen during that time, or it was a normal university period for you?
I would say relatively normal, except that perhaps the one main difference is perhaps I spend a bit more time, or a lot more time than other students. Perhaps giving tuition, earning extra income. I sort of supported myself through the university.
Okay.
Because actually giving tuition is It's good money. So
It's still good money now.
it's still good money, and I think in my final year in the U, I was giving 7 tuition sessions a week, and
Right.
back then you could earn say 1,500 a month.
Wow.
Giving tuition as a student,
Mm-hmm.
That's good money.
Oh, that's almost your first business, would you say so?
Sort of, yeah.
Okay, then after you graduate from engineering school, you went into the engineering line straight away, or?
I didn't.
Okay.
I didn't. So as I mentioned, when I get into the U, I didn't really know too much about working world.
Mm-hmm.
Neither was I very clear eventually what I'd like to do. It's only in my final year in the university, when I was still in engineering, that I started thinking about possibility of getting into the financial area, into
okay.
investments particularly. So that's when I started to find out more about the prospects in the financial industry and so on.
Okay.
And after I graduated, then I didn't actually pursue engineering jobs. So my first job, which I only stayed for 4 months, was in a finance company.
Ah, okay.
So I worked as a credit officer for 4 months.
Right.
Yeah. But by the time I graduated, I felt that I wanted to be an analyst and investment analyst, and I started looking for jobs in that direction.
Ah, okay. So, but were you already investing in the university time, or from your tuition savings? Or?
No, I wasn't. I wasn't. I was. I still didn't know much about investment.
Mm-hmm.
I essentially felt that, well, that's one area that I like to do, and I think I can do well, despite the fact that I hardly know anything in there. And the first thing was to just look for a career in that direction.
I see. Okay. So you were at the credit side of the financial business.
Yeah, just
at the beginning.
for 4 months. But in the meantime, then I was still looking out for opportunities.
Okay.
So I ended up with a job at Schroeder Securities
Right.
as an analyst. So I think the person who hired me back then was Kevin Scully. Maybe you might know him. So he was the person who brought me into the industry.
Right.
Even though I didn't know much about investments. I remember that my first week at work back then, my ex-boss, Kevin Scully, was asking me, "Oh, so what's the PE of that company?" So I was asking, "Oh, so what's PE ratio?" So that's how I started.
Okay.
So this was 1991. I joined Schroeder Securities in 1991. I was there until 93.
Okay.
Yeah, about middle of 93. Then I went to Baring Securities.
Okay.
Back then. Back then was still Barings, and Barings was at that point in time one of the leading stockbroking firms in Asia.
Were you doing quite similar research in Barings as well?
Yes. So in Barings, I was doing this something similar. I was an analyst as well. So I was there from 93 till end of 98.
Right. Okay. Yeah. And I understand you work your way to become the head of research in Barings as well, right? And what do you see in the market at that time? Why do you choose to not continue your career path since you are already on this trajectory, but rather you decide to come out and start your own company?
Well, I would say that when I was an analyst, I actually enjoyed my work and so on. And in 97, I became the head of research for Baring Singapore office. But during the crisis, at the end of middle of 98, Barings regionally decided to do a bit of restructuring,
Right.
whereby they were sort of combining the the role of two head of research into one, meaning the head of research for Singapore and head of research for Malaysia. The role were being combined into one.
Oh, okay.
Then they were still happy for me to stay and be a regional analyst covering that. But while I was still earning good income, I'm one of those people where if I'm not excited about a job, then I generally feel that I probably prefer to just make a move,
Right.
and decide what to do next.
I see.
Yeah.
Okay.
So because of that, I decided that I want to move ahead and do something else.
I see. And is that during the crisis period that you come up with the idea of Fund Supermart, or it was already at the back of your mind for a long time?
No, during crisis period, after I left, on day one I wasn't sure what I was going to do, but I suppose it didn't take me too long for me to decide, hey, I want to just do some investment for myself, and in the process, why don't I pull together a small fund with the money from some other private individuals as well. I think I was very much an investor at heart. I think all my years being an analyst, my money was always mostly in the stock market. And even though I left the stockbroking industry, that in a sense did not change that aspect of it. So in fact, I was very much into investing in perhaps even more so after I left.
Okay.
So started a small fund of my own. Motivation was really to invest my own money, and did that, and so that was starting end of '98.
Wow. Okay.
And good time, because that was.
Were you not afraid as well? Because given that it's such a big crash that we haven't seen for such a long time, were you still very confident at that time about the stock market and about the economy?
I have to say that at certain phase during '97, '98 was a bit, taken aback by the magnitude of the crash and things like that. I think at the initial phase of the downturn, I was sort of avoiding some of the losses, but I went back into the market quite early, all right? And then there was a even deeper dive in the stock market after that, and at the lowest point, I think I was probably down quite badly. Didn't really want to look at how much my portfolio was down on a personal basis, but I suppose I'm two things about me is I'm probably naturally a bull. I believe that eventually the world will become a better place. The crisis will pass, and companies that have solid fundamentals will eventually come back. So the short-term volatility is there, but eventually you'll get past. So on a personal basis, if you can stomach those kind of fluctuations, then eventually you'll be okay. So that was the thinking, and went through that. In fact, as the market dropped, then I sort of you could say increased my exposure even more.
Right. Okay.
Yeah, and which eventually turned out well.
Yes.
For me.
Yes.
And in a sense that helped to lay some of the seed capital for iFast as well. Eventually.
Okay. Okay. So during the time you doubled down on your investment in 1998, and when did the seed of iFast came about together? I understand that you come up with you founded the company together with your co-founders.
Yes.
Yeah. So maybe tell us the origin. How did this idea come about?
Well, back then, at the end of '99, I was sort of a manager in a small fund, and back then my co-founder was Mo Hon Ming. He was sort of with me, just helping me a bit and so on. But soon after that, he got a call from one of his friends from Boston Consulting Group. All right, two young chaps who basically were suggesting some business ideas. So we met them over lunch, and back then I suppose the internet craze have already started. US, Europe of course started earlier. I think Asia, because of disruption from Asian crisis, the craze about internet business model started later. So it started sometime in '99, and by end of '99, I think the dotcom bubble, in a sense, had become quite rampant. People were really all about getting into the internet business. So then people were suggesting all kinds of business ideas. So before that, I wasn't thinking of starting a business other than what I was doing back then, managing a small fund. But subsequently, this idea of coming up with a funds portal came out at the end of '99, and that's how we started. So we had a bit of a chat and discussion with the guys from Boston Consulting Group. But subsequently, we realized that actually the thinking in terms of exactly how to do it is a bit different. But I suppose the seed has been planted in the heads of myself and my co-founder.
Right.
About starting something in the funds area in a unit trust industry. So that's when myself and my co-founder started thinking about what can we do.
Right.
Yeah. So then that's where this concept of fund supermarket came about. Because back then in the US, that was already in existence. People talking about fund supermarkets and so on.
I see.
So that's how the idea came about. And I suppose the online unit trust fund distribution is a simple enough business model to understand. Back then, the banks were doing good volume of business, selling unit trusts at 5% sales charge. So online unit trust distributor, if you just do it at half the sales charge, 2.5%, there's still good margin. So sufficiently simple business model to understand. Except that back then we didn't have a license. We didn't know whether we're going to get a license. But I suppose if you want to start a business, you have to take a bit of calculated risk and then go for it. So that's how it started.
Right. So you started the website and started talking to people before you get your license, or you were doing that concurrently?
Yeah, you could say that it's before we get a license. So we essentially started the website, putting together a small amount of money. Back then, about 550,000 on day one in early 2000. And then start building the website. We started talking to MAS as well, but we didn't get a clear indication of whether we'll have a license or not until around June, I think, June 2000. And that's when we knew, okay, we have a license, then this will be pretty exciting.
Okay. So you are the true disruptor even before disruption is a keyword right now, right?
Back then, there were actually quite a number of financial portals. Back then, they don't call it fintech. They just call it financial portal.
Right.
So there were actually quite a number of others. But I think most of them didn't really have a robust business model. And the only one that started around that time and continue to persist into something decent is actually Dolodex, all right,
Okay.
which subsequently was acquired by Aviva. There were a lot of other financial portals that started, but the business model was about trying to generate advertisement, hits and clicks and so on, but
Yep.
that wasn't sustainable.
Okay, but when you first started the Fund Supermart and talking to the unit trust fund managers, is it an easy sell to them to ask them to distribute from your platform, because and you're going up against the banks, right, directly? Do you face a lot of resistance? How do you overcome that?
There had to be some persuasion, all right. I suppose when we started, it was actually near the top of the dotcom bubble, and at the top of the dotcom bubble, you find that all kinds of sentiment change. So people believe that the world is going to be changed by the young startup companies and so on. I remember back then, I think Singapore ministers were even quoted on TV as saying, those guys in the 30s are better than those guys in the 40s. Those guys in the 20s are better than those guys in the 30s.
Okay.
That was a kind of a thinking sentiment. And I think you have CEOs of, I remember one CEO of a publicly listed company in Singapore in the internet business. I was quoted as saying, well, internet companies should never worry about profit. That it would be the worst thing to have to worry about profit. So that was a sentiment there.
Okay.
I think if you observe a stock market, you find that the sentiment change big time through all kinds of market conditions, and the sentiment can change 180 degrees. So I've gone through some of the cycles, so I know. So in a sense, that was sort of the negative side of a bubble. But to me, there was a positive side to the first dotcom bubble. That positive side was the fact that even regulator was willing to take a bit more risk, right? So I think back then trying to get a license to try to get a dealing license is actually quite difficult. I remember back then when we look at some of the guidelines, it says to get a dealing license, the paid-up capital requirement is 2 million, which is fine. But there was additional criteria. It says you need group shareholders funds of $500 million. So that was the requirement. So because Singapore's financial sector, in a sense, was built on the basis of Singapore being able to attract all the big global financial institutions, or the MNCs and so on. So it was meant to be it is built through attracting the likes of Merrill Lynch and Credit Suisse and so on. I
Those
think
with
they
500
didn't
million.
imagine that the dealers would be companies that Fund Supermart or iFast that were a startup. But I suppose the good thing about the first dotcom bubble was the fact that MAS was willing to embrace a bit of the risk and give license to us who was basically a startup.
So wow. So you got your license in June 2000.
We sort of was told about the in-principle approval in June 2000.
Right.
By the time we formally obtained a license was December 2000. That's when we started actually transacting the trade dealing.
And once you got that, and you can start selling your unit trust.
That's right.
How was the response from the market?
We actually started off quite well because even before we officially obtained our license to deal, we already have our portal up on Fund Supermart. So it was a content website back then. I think by middle of the year, the website was already up. I think by third quarter it was already up. So we are basically generating content,
Right.
doing a bit of what you're doing currently, interviewing fund managers,
Okay.
interviewing people writing out about articles. So some of the initial staff that we hired include some ex-journalists
Okay.
whom we hired join us. So we started with a content website.
Okay.
So because of that, we already had some initial traffic and following on the website. So the day we got a license, when we launched the dealing service, then we actually had some decent traction right from the start.
Okay, and then during this upswing, at that time was the dotcom crash as well.
That's right.
Right. Do you feel any impact on that?
Well, I think the peak of dotcom bubble was April 2000, and after that it was pretty much downhill for next 3 years. I think it was pretty much a bear market for the next 3 years, and I suppose that is what will differentiate the different companies. I guess the real company from the companies that were just being opportunistic and trying to make quick gain out of the bubble. I think a lot of companies that started in 99 and early 2000, they couldn't last because I think a lot of the businesses were there trying to make money from shareholders rather than for shareholders, because investors were hot about internet companies, dotcom. They were willing to believe any story. So of course then a lot of company would then tell some story, take the money, either burn the money or pocket some themselves. So that's what happened. But I suppose the true test of the company comes during a tough time, during the bear market, when nobody believes in dotcom anymore. Right? What do you do about it? I think that is the true test. So I suppose so after that, that's when the tough times were there. I suppose particularly in 2002, 2003.
Yep. But as you grow, were you able to break even straight away from your business? How long did they take?
We didn't break even for a few years. If you take the period from the day we started to the day we broke even, it was about coming to 5 years. Right? So we only broke even in the later part of 2004. I think the more difficult part was 2002 and first half of 2003.
Right.
Particularly the SARS period, which was around March, April 2003.
Okay.
That was probably the most frightening period.
Because the market just softened tremendously?
I think the market softening is one thing. I think if you're used to the stock market, you have seen lots of crashes along the way, and you know that crashes come, but if the company fundamentals are sound, you eventually come back and can get to a new high. So that's not an issue. What was scary, I guess, was the fact that SARS was something that the whole world hasn't seen before. Overnight, you actually find that people didn't dare to go out, right? Because of all the infections that were going around. And this is something that's sort of becoming global in nature.
Yep.
So people start to not be willing to go out, more and more. Or as businesses, then we start to have to plan for contingency, because we could all of a sudden get quarantined. So what happens if all of a sudden we find that among the list of our employee, there's someone who has been infected with SARS? Then it could very well be that everybody in the company will be quarantined.
Oh, wow.
So that is the kind of environment that SARS brought about. So we had to essentially have contingency plans whereby we say, oh, half of people work in office, another half work from home, just in case somebody get infected and somebody have to be quarantined.
Yeah.
So we still can get the business moving. So that's basically what we went through.
Okay. Of course, you weathered through that. And at this point, you have been starting to put in more products into Fund Supermart, but selling the unit trust is still your key products, right?
Back then it was just unit trust. What we did start dealing in Singapore government securities, Singapore government bonds. That was the only other product other than unit trust. So essentially unit trust was still the core products.
Okay. And at this grow, when did you start to realize that, beside doing the B2C unit trust business, you want to go into the B2B business, which is serving the financial advisors?
That actually started relatively early. In fact, sometime in the year 2000, the idea already started to come.
Okay.
Because while we started our business with the Fund Supermart model, online unit trust distribution, along the way then we decided that we should also look for ways whereby we can tap into the brick and mortar part of the industry. So that idea came about when back then Lee Hsien Loong, who was at that time the finance minister, he announced that they're going to introduce a Financial Advisors Act, which would in turn bring about the emergence of independent financial advisors who can advise in both insurance and investment products. And a key investment product for financial advisors would actually be unit trust. So following the announcement, that's when we started to plan the B2B part of our business model, or the iFast part of the business model.
Okay.
Yeah, so that's how the iFast part of the business model came about.
I see. Okay.
But the actual launch of the iFast business model was sometime in 2002, because we have to wait for the actual regulations to be enacted.
Okay.
And that came about only in 2002.
I see. Okay. It seems that from all your plans, you seems to have a very good confidence on different products that you are going to try, and you do a lot of research on basing on the government policy as well from the iFast business. Is there some point that you ever struggle and you almost reach the point where you doubt yourself whether this business model is viable? Have you ever reached that point before?
Well, there's some points where we struggle. In a sense, we do. We definitely went through times where things look quite bleak. During SARS period, for instance, I think we were burning $300,000 a month back then. And our balance sheet was still, not that big and things like that. But I always make this statement, which is that I think all companies that eventually can grow and grow well, somebody in that company, the person leading the company, should never waver in terms of the thinking about the future of the company. I think so shareholders' emotion change all the time. The change of the changing stock market. In fact, as an analyst, I know I look at the equity sales team that I work with. The emotion change by the hour. In the morning, when the index is on the uptrend, then they're bullish. By the afternoon, when it turns down, then they're bearish. 2 hours later, when it turns up again, they're bullish again. So emotions change all the time. Shareholders, investors who invest in startups and private company, emotions will change all the time as well. So something has to be there to ensure that whatever the condition, things will continue. So I think that I feel is the job of the entrepreneur, the CEO. Somebody need to be there to truly believe that they'll be able to find a solution to make sure that the business succeeds.
Yep.
That I think is key. That's fundamental. Otherwise, business at some point will close down.
Yep. Okay. And of course, you are growing your Singapore business. At what point do you decide you want to become regional and started expanding overseas?
That was in 2006. All right. Then we started to say, okay, let's look at some overseas opportunity, because we broke even at the end of 2004, and then 2005, 2006, we were growing quite rapidly. I suppose the nature of business is such that once we turn profitable, once we reach a critical mass and turn profitable, then the base is there, and then we can continue growing and progressing from there. So by 2006, we felt that okay, we're ready to start to look at overseas market. So the first market we wanted to go to was Hong Kong, because Hong Kong has some similarity to Singapore. It's also a financial center, so we thought it's quite natural to actually want to start off in Hong Kong. So in 2006, we started to work on our plans to expand to Hong Kong.
Okay. And the Hong Kong business was just a replicate of what you did successfully in Singapore, or there's some difference?
Very similar. Yeah. Today we're in 5 countries. I would say in a majority of countries, the business model is quite similar, especially between Singapore, Hong Kong, Malaysia. I think it's very similar. When we're looking at Hong Kong, initially we started with the B2C part of the business. And so in 2006, we started on working towards getting a license, and by second half 2007, we got approval for our dealing license in Hong Kong.
Right.
So we launched a business in late 2007.
Okay. And that roughly, when you started to expand, do you have to take in new capital, or you were still mainly using your own company resources?
So back then, going to Hong Kong, we didn't need to do that, because I suppose the period when we needed the new capital was the first 4 years. So from 2000 to 2004, or perhaps more of 2003. That's when we needed the capital.
Right.
But by the time we broke even 2004, then we started to become a cash generative business. So the nature of business is such that before we're profitable, then we need to invest and so on. But after we turn profitable, then it becomes quite cash generative.
I see.
So on the basis of the profit from Singapore, we're able to fund our Hong Kong business. That's how.
Okay. And you talk about at the beginning you need to raise some capital. One of the company you raised from was from Singapore Press Holdings. Can you tell us how did that deal came about? How did they heard about you?
Well, that was in second half of 2000. Actually, our first corporate shareholders was a stockbroking firm.
Okay.
DMG. Back then it was called DMG and Partner Securities, but DMG subsequently became OSK and then became RHB Securities. So that was our first corporate investor. So among myself and my co-founder and friends, we pulled together initial capital of 550,000, but we know that we needed additional money, so we approached a few stockbroking firms. The reason why we started to approach a few stockbroking firms was because we felt that they will help us to be able to obtain a dealing license, which is what we need for our business. So DMG came in then. Then subsequently we needed additional capital, and So we were looking at for potential investor, and back then SPH had an internet arm called Asia One. So SPH Asia One was listed back then, and I suppose as a listed internet company, we sort of broadly fit into their business model. So we approached them, then they decided to invest in us. So that happened at the end of year 2000.
I see. Okay. Wow. Talk about timing.
Yes.
Yeah. Okay. So, of course, you started in Singapore. You break even after around 5 years, and you went to Hong Kong. So a few years later, you went to Malaysia as well, right?
Actually, after Hong Kong, we also started in Malaysia, and it was 2008. So after Hong Kong is a market where on our own we wanted to go, and we felt ready for that. Then along the way, when OSK bought into DMG, and then they became our shareholder as well, then they're suggesting that, hey, why don't we start a joint venture in Malaysia to start a platform business.
Okay.
And as a Malaysian, I feel quite comfortable with Malaysia as a market, and we readily agreed and said, yes, let's go in.
see.
So we started a Malaysian business, and we started as a joint venture. Yeah. Subsequently, we also have DWS, Deutsche, approaching us, suggesting that we should start a platform business in India.
Okay.
Yeah. Initially, I was a bit reluctant because I've been to India once in my life, and
Okay.
I felt I didn't know India, and I always believe that you want to do any business, you have to make sure you know the business very well. But after further discussion, given that the majority of investment in cash was going to come from DWS, so we struck a deal, and then we started a joint venture.
I see.
In India.
Which year was this?
I think the agreement was made in 2008. By the time we launched a business, 2009.
Okay. Wow. So I guess during this period, your reputation is already growing, and you're starting to see more people approaching you.
I think by 2006, 2007, I think the industry already took note of us because we were growing quite rapidly. And, it was a nice growing business, and our business our business model is relatively unique. I think if you take other countries like US, Australia, back then, business model of a platform is actually quite common. But in most of the country in Asia, you don't see much of that.
Yep.
So because of that, there were some interest from some global financial institution in working with us.
Okay.
Yeah.
And during this time, I guess as you grow more and more, when do you reach the point you decided that you want to do an IPO and get iFast listed? What was the rationale there?
So when we went into Hong Kong, Malaysia, and India, in a sense, we probably started businesses in new countries too quickly, because we basically had Singapore as a profitable base, and on the basis of that, we were going to a newer country. So while our joint venture partner invested their capital as well, but the truth is, as a group, I think the resources it takes to actually start business in 3 additional countries was quite substantial. So on hindsight, I suppose, it's not ideal. Well, we should try not to go from 1 country to 4 countries. We didn't have to spend on 3 years. But I think that because that also coincided with the global financial crisis.
Right.
So while we were a lot more established already back then, and we were okay financially, but we still face a bit of pressure in terms of the demand on our overall resources for a couple of years. But following that, then we started to grow, and 2010, 2011, 2012, we were progressing. So there was a period of time where I was thinking or asking myself, do we really need to become a listed company? Because 2011, 2012, we were profitable. We were generating cash. We were paying dividend. So if we want to list, it entails some dilution. So in a sense, it's a bit of a dilution on my dividend as well. So there was a bit of that thinking that I was going through. But along the way, I decided that actually we should push for our listing. There were probably 1-2 catalysts that prompted me to be quite convinced that we should push for listing. One of the key catalysts was the fact that in 2011, 2012, we actually tried to make 2 acquisitions.
Okay.
All right. One in Singapore and one in Malaysia. In both cases, it didn't go through.
Right.
And I would say that the main reason why it didn't happen was not because we're not able to acquire. It was more because we felt that the regulators wasn't that comfortable with us.
Okay.
Making the acquisition. Because back then we were still seen very much as a small company.
Right.
Because after all, we're operating in the wealth management industry. And the wealth management industry, the key players are basically billion-dollar companies.
Yep.
So while in our space we have built leading market share for many years, and we have been quite established in our space, the truth is, as a wealth management player, then we're still deemed to be a small company.
Right.
That to me was a key driver, a key consideration for me in deciding that we should push for a listing, because as long as we remain a private company, for a long time now, I think we are going to be perceived as not a startup anymore, but as a teenager. We're not a grown up. I mean, the banks, the insurance company
I understand.
are the grown up, are the adults. I think my feeling was we're seen as a teenager.
Okay.
So if you're a teenager, then you, my side of regulator would be you got to know your space. All right. So we felt that in order for us to be able to fulfill what we need to do in terms of being a leading platform on a continuous basis, we need to not just have a broader scale, but to have a broader range of activities. Broader range meaning we need to be a more complete wealth management platform. It's not enough to essentially be dealing with just unit trust, because most investors, they don't invest only in unit trust. Most investors will want to invest in unit trust as well as stocks, bonds, and increasingly ETF and so on. So to be a wealth management platform that will be there, that will be at the forefront of the industry in the long run, we need to be a comprehensive wealth management platform.
Right.
But to be able to do that, I think for our size back then, I think we're still quite small, and trying to get the licenses, we felt will take a longer time to have to persuade the regulators to give us additional licenses.
I see.
So that was an important consideration in terms of being able to be seen as an adult, to be able to undertake additional activities,
Right.
and to grow from there.
I see.
Yeah.
Okay.
So so by 2012 we decided yes, time to push for listing.
Okay.
And by end of 2014 we got listed.
Yep, definitely. And I think some of the key development after you got listed is number one, you started your brokerage business, and also you went to China, maybe a little bit before that. But speaking about the brokerage business, can you share with us your thoughts on what's wrong with the brokerage business right now that you see, and what iFast through FSM1 is able to solve that issue?
Yeah. Well, if I look at the brokerage business, I would say that there will be changes that will come going forward. Even though Singapore is known to be a leading financial center in the world, the truth is the brokerage rate for the retail investor on average is actually very high. All right, one of the highest among all the various financial centers. And I think the reason for that is because, firstly, the insufficient competition among the stockbroking firm. Of course, the incumbent stockbroking firms will disagree, but we just need to look at the number of stockbroking firms in Singapore compared to, say, Hong Kong and other markets like US, UK, etc. to know the differences. So when there's not that many players, you find that the business model would also be not too varied. So many stockbrokers who do the retail business, you find that they still rely on contra trades for a large part of their revenue.
Yeah.
Which I think, in my opinion, is a relatively outdated model, and brings unnecessary risk to not just the investor but to the broking firm itself as well. That also prevents the broking firm from being able to give more competitive pricing than they otherwise can. So you take example in the US, a player like Chow Shop, their trades are basically $4.95 per transaction. If you buy $1 million worth of stock, your brokerage is $4.95. That's basically how it works. In Singapore, that would have been unthinkable in the past. So the truth is that there are alternative business model that already exists in other countries that can actually be brought to Singapore, and that in essence is what we are basically doing.
Right.
So we are not able to cater to all investors out there who have been regular traders, for instance. We're not able to cater to the contra investors, but we think that for a broader segment of the industry, I think we can deliver better overall value to the investor with the model that we have.
But when, of course, most of us will know the story. When you wanted to launch this, you actually partner with OCBC Securities. At first, can you talk to us what happened to the deal? You know, why do they suddenly pull out at the end? What's the story there?
Yeah. So if you look at the stockbroking industry, you actually find that it's actually quite common for stockbroking firms to actually offer access to various markets through going through other counterparty. For instance, I think almost all stockbrokers in Singapore would offer access to US market, but most of them don't have a subsidiary in the US. So the way it works is to essentially go through another broking firm in the US. So that's the US counterparty. So we're looking at this sort of model for Singapore. Of course, we know that we are coming in to compete against a local player doing the retail business. So we know that if we go through someone like OCBC Security, there's some risk. But the reality also is we were exploring other players initially, other institutional players and so on. But the truth is there are not many alternative service provider that we could go with. So eventually we had to take a bit of risk and went with a broking firm that also have a retail business. At that time I thought that they're mature and forward-looking enough to understand that different business model can coexist. You can be a competitor yet be cooperating at the same time. But I suppose that judgment was wrong, right? So that's why we had that disruption that happened back then.
I see. And of course, once the deal broke down, you turned around and went to get your own license, right?
Yes.
And you were almost able to get it at record speed, given that there's almost no new brokerage license been released for some time.
Yes.
So how did you overcome that?
Yeah. In a sense, perhaps the fact that that incident happened, that might have, on hindsight, helped us a bit because I think while we expect to eventually get it, but I think SGX and MAS they sort of help to perhaps hasten the process as well in our application. So originally we decided to go on the path of routing through another party because we felt that it was going to take a much longer time. But when that happened, there's no other choice. We have to try and go direct, and we have to plead quite hard with the authorities and regulator to get them to process our application faster. And that eventually happened.
Wow, that's, I have to say, that is really one epic moment, and it's really impressive to see it being happen at such a fast speed. And I guess it kind of showed that SGX and MAS they are quite open to new technology and new disruption to the market. Yeah,
that's right.
Yeah. Okay. On the other development, which I think I was previously on the shareholder meeting last week, and many of them is talking about China. And can you talk about your China business? And it's actually quite different from your business elsewhere. And what's your vision for the China business?
I think the difference for China is more the fact that we're focusing more on the B2B. Of course, even within the B2B, there's some variation in terms of how we do it compared to how it's done in Singapore, Hong Kong, and so on. But broadly speaking, it's still pretty much a platform business, and it's a B2B business model. So that is broadly the model, and fundamentally, I think it's still the same business. I suppose investors are worried because they're looking at the initial losses that were chalking up. And it didn't help that some of those losses were also happening when in 2006 we took some dip in our existing core market as well in terms of profitability, because we're also investing in new capability in stockbroking and things like that. So it was a sort of a double whammy that caused investors sort of to be worried. But we look at the China business and we are very clear that what we're doing today is actually important, perhaps even necessary for the long run, and it will be worthwhile for us. In a sense, we have to ask shareholders to try to take a longer term view. Longer term meaning don't just look at 1 year, 2 year financial. Think in terms of what can be created in the next 3 years, 5 years, 10 years, and the quantum change that it can do for our business when eventually we take off. Of course, investors look at the 4 million per year loss that we were generating last year, and they generally don't like it. But I think if you look at this as a wealth management industry and look at the potential of it, then the truth is 4 million a year for China. It is really not something that you say to be extremely high.
Yep.
I think the potential for sure more than justify some of the initial losses that we're talking about. Unfortunately, I guess investors tend to just look at it in terms of the quarterly number. So far they look at it in terms of quarterly number, and you combine the profits from the 3 existing markets with the losses from China, then you have a lower base, and they value us on that basis.
Yep.
So in a sense, our valuation as a company, as a stock, is suffering because of initial investment in China. So I often mention that I think China contribute a valuation of negative 100 million to us currently. That's how I see it. On a personal basis, of course, it doesn't matter so much if since I'm not looking to sell my shares. In fact, I'm from time to time I'll buy a bit more, and I get rewarded through the dividends and things like that. So on a personal basis, that's fine, because I know that eventually 5 years later, 10 years later, you'll be much higher than where it is. But I suppose investors, sometimes are worried from the shorter term point of view.
Yep. Definitely. But what you have achieved over the last decade or so is quite amazing. People talk about fintech now. In fact, iFast is really the one of the first and most successful fintech in Singapore, in my opinion. Before we go, maybe I can just ask you, if you can go back in time, back to 2000, what kind of advice you will give to your younger self right now?
I think in terms of the broad business model and the way the company is run, it probably would change so much. But I suppose with the benefit of hindsight, then we will have a better understanding in terms of some final aspect of how we price our services, how we launch which part of services, how do we prioritize, and perhaps being clearer about not going from 1 country to 4 countries in a span of 3 years. So these are probably some of the changes and differences that we'll make. But I feel that these are just some of the details. I think most importantly, the core philosophy need to be there, and I think one of the key philosophy that has to be there, that we believe that we have embraced of this world, is this mindset about a win-win situation. Win-win-win-win. Win for the company, win for shareholders, win for end client, and win for employee. I think business is about trying to take care of all these different stakeholders, and then making sure that we have the fairest deal being drawn. We need to get the best fit, to do all these things. I find that in the wealth management industry, very often the one who are at the receiving end would actually be the end client. Because a lot of end consumers don't understand and things like that, so they end up being at the receiving end. I think if we want to build a long-lasting business in the long run, then we do need to make sure that we properly take care of them. We want to build the business based on the thinking that even if the clients are not intelligent today, they will be intelligent in the future. So we must be transparent to them. We must make sure that we try to push for transparency and so on. So the ability to balance the interests of different stakeholders is important. To be able to do that, I think one of the thing we do more than other companies is a willingness to think long term. I think when you think long term, you start to arrive at different decisions compared to if you think very short term. And one very obvious example is how much should the CEO pay himself, right? Or how much should the CEO be paid, rather. Some CEO will try to maximize what they get. But if doing so actually prevents you from doing what is needed for the company for the next 1 year, 2 year, 3 year, then perhaps that is not ideal. So from my perspective, if I take a mindset, I don't need to maximize my personal pay. If I take that mindset, but by taking that mindset, I'm able to tremendously enhance the value of the business. Because then we have more money for a lot of other things, including taking care of the other employees and so on. Then we have a much bigger business in the long run, and I'll be far better off in the long run because the value of my business will be much bigger.
Yep.
Yeah, so I suppose these are some of the philosophy that we have.
With that, thank you so much, Mr. Lim. Thank you very much for your time.
Hi guys, if you enjoyed the show, I hope you'll rate and review us on iTunes. And if you want to get the latest notification on our next show, do subscribe to us both on our YouTube channel and our podcast on iTunes. I'll see you around.